Hello my fellow freedom builders and welcome back to the channel. It is Friday night here in Denmark and I just wanted to give you a very brief update since the earnings season has started, and I will in the upcoming weeks follow that, and I will kind of give you a brief explanation of what I'm seeing in these earnings seasons. Now, why is it important? Well, first of all, it is nice to see that the stocks you own come up with some beating of expectations and so on, but I am looking more of the big picture actually, and what I'm looking at is if there is an overall tendency to the big stocks that they beat their the forecast of their earnings per share and the revenue. The website I'm using is dailyfx.com. You are going in here in calendar, you're choosing earnings calendar, and then you see this. Now, normally it shows everything in here. Now, what I do here, and that is because I'm mostly following the US market here in the earnings seasons, is that I am deselecting all the other areas, only have Americas here, and then I'm deselecting everything except the United States. And then in here, I am removing the low impact here and only having the high and medium impact. That is how I have set it up. You can set it up however you want to, but this is just to give me a very quick view over the market. Now, what happened yesterday is that we had some PepsiCo here, we have some Delta Airlines and so on, and what we could see is that the big companies were actually most of them were beating the estimates in earnings per share. This is what I like the most. That is beating the actual earnings. However, it is also good that they have increasing revenues. And there's two things here that I'm noticing. First of all is I want them to beat the forecast. Now, I also would like to see that the actual number is higher than the previous number, but we should remember that the forecast is what the analysts are basically pricing the stocks from. So if they have priced a stock like Cintas as a forecast of 3.19 and it is beating the forecast, then that is a positive. Well, it's not beating the last number here, but that is not necessarily important in the aim to get the stock upwards. So first of all, this was yesterday. We just had a few stocks. In the really busy day, there are lists that are long down here, but yesterday we had these stocks here. Today, Friday, we had the big banks, some of them. We had BlackRock that actually beat quite a lot, actually very much compared to the forecast. We had Citigroup beating, we had JP Morgan beating. I know BlackRock went a bit below in the revenue, but otherwise it was mainly blue numbers here. We also had State Street just a bit below the forecast, but all the earnings beat the forecast, and 4 out of 6 beat the forecast on revenue. So why is this important? Well, what I said in the last earnings season was that we saw a tendency, and this was in the here in the beginning of April, of course, beginning of April. I said that for the first time in a while, we actually saw that very much. I think it was something like 80%, 85% of the stocks that reported earnings, they beat their earnings per share forecasts. And there were a lot of analysts and a lot of predictors out saying that everything is really going down because that the actual numbers here were way below the previous from last year, for instance. And yes, they were. However, that was not important because the market had dropped a lot. And the reason why it had dropped was because the forecast had been set so low. So when the actual numbers start to beat the forecast, and they did that big time last time in the earnings season, there is a good sign that we have reached the bottom. I said that from a technical point of view already here in the beginning of 2023, that we were starting to see new higher bottoms, higher tops and so on. However, when we were into the beginning of April here, in the beginning, I only had the technicals to show it that the big guys were moving into the market. But when we went into the beginning and mid-April and we saw the actual earnings numbers were beating the forecasts left and right, what I said was, now we're going to see an upwards market. And what we actually saw there was something like we went up 10% or so over the last quarter. Now, are we going up 10% more? Well, that depends. We could do that. I'm actually expecting a fairly positive second half of the year, even though I would like to see a little retracement of 5-8%, just for the market to take a bit of a breather before it moved upwards again. However, if we are going to see a lot of these numbers, and I will report them to you from week to week, if we're going to see a lot of the numbers beating the forecast, I actually think that this one can keep moving upwards. So if we just take a quick look at my stock scanner here in the TPI chart, we can see that since the 31st of March here, that was actually just before we went into the earnings season here in April, we saw it went to a long-term green trend here. And what we did see the other day here is actually what I really like to see, that it gets into an accumulation phase in the oversold area on the weekly chart. And we have seen here this week that it went into green. So that was one of the reasons why I really started to load up on my swing trading stocks. I had 3. Before that, I think I'm up at 7 or 8 now out of 10. So I started to really load up on my swing trading stocks, because when we see a lift like this in the market, it normally gives us a lift in a lot of the swing trading stocks as well. So that is just a little tip for you, that I am in swing trades most of the time. But when I see something is getting overbought accumulation in the index, I do trim my portfolio a bit, and then when we start to see some sort of a potential bottoming out of our statistical indicator down here, then I load up some more on the swing trading stocks to have as close to 100% in the swing trading portfolio if possible. So that's it for now. I will give you updates next week. I will probably make 2 separate videos, because we are having earnings out on, for instance, I think it's Tesla and Netflix and some others next week, and I will do some separate videos of them, just 3 to 5 minutes, to have a look at them at a short term for a swing trade, at a mid term on a just on the value chart, and then on a long term where we are looking at some discounted cash flow and if it is actually good value on the long term. So you can look forward to that. Remember to hit that bell notification and like and subscribe and all that jazz, because then you get a notification when we come out with these videos about single stocks. So of course this weekend you'll get my update on the swing trading and option portfolio. Monday you will get my swing trading candidates, and during the week you will get the Netflix and Tesla and maybe one more. So there will be enough for you to watch next week. In the meantime, take care of yourself and your money out there, and I'll talk to you again shortly. Bye for now.